Inducement is the key of your trading success. It's always help to identify the market structure accurately, and when you identify the market structure accurately, then you can make a trading, you can apply your trading strategy and you can make a trade with the confidence and the mostly 99% chances to win your trade. So this is why the inducement topic is very important. So you must watch this complete video. You will understand this every steps of inducements, and then you can find the market structure easily and perfectly, and everything you can find and redefine the complete strategy. This will be fulfill your strategy to make your trading improvement. So let's start this video. Now let's try to understand the inducement topics, that how it's actually work inducement. So first of all, we see the market did a move. So this is our highest and lowest point of move there. So then we're going to marking at our high and lowest point. So first of all, we're going to making it the structure marking. So this is here our structure marking we are going to do. So this is our breakout structure. We can see this breakout structure, and then we can see this is our highest point. So this is our highest point we find out, and then I'm gonna mark it as a high, and then this is our lowest point, so which is our low. So this is how the market structure is identified in basically in by default way the system we identify the market structure this way. But when we see inside of there internally a move from there, it is created and then it's gonna move there. So when it's created this kinds of move, so what actually we do, we always think that, so most of the thing, the mistakes we do here, if the candle is close, so let me make it, this is high and this is our, let me draw this, and this is our topic, and this is if the candle is little bit of cross above here, so we think the market is completely did the breakout structure, but it is actually not the breakout structure. The reason is why it is not actually the breakout structure, and you can see this move is when actually this move is created, and it's not actually shifted to this move 15% of Fibonacci retracement, it's not shifted there. So this is why this is not a breakout structure. We know that this is the final reason we know that this is not a breakout structure. But what is it should be called? So this should be called a inducement topic. So this is why inducement topics is when you can see that this inducement can be a various types of. So let's first of all make it inducement. So this is our inducement, which is basically I'm gonna call it IDM. So this is our inducement we understand. So what is basically inducement stand for? The inducement stand for, this is internally this area, its market is created some liquidity zone. So you can say it's directly some of the liquidity zone. So some of the liquidity is here. So this is actually the inducement topic, and this inducement can be various types. So this move can be do a little bit of close above this high, or it can be make equal high, or it can be make lower high. So actually I just move the highest point, or it can be make a lower high, that's also fine. Then still it will be called inducement. Everywhere it's moved the equal high or little bit of higher there, but it's always called the inducement because this is actually creating some liquidity area. And when it's created some liquidity area here, and then you can see the next one when the market is did a small push up and then it's fall down, because it's a liquidity zone the market is created here. So this liquidity is small internally, this liquidity zone is called a inducement level, which is basically IDM. So where actually most of the things we enter this actually 0.5 level or below this 0.5 level. For example, if we find any kinds of demand zone in this area. So this market is when the inducement is created, and this market take a small pull up and then it's calm down below there, and then take it, then after there this area is one reset, and then market is shoot out to the high. So this is why the inducement topic, the IDM, is this area which is a little bit of internal structure. If this things is creating a structure before falling there, so this is actually an inducement. So inducement is basically a liquidity zone, as I already explained that. So I hope you understand the liquidity zone and inducement topics is here, and this is the same thing. So this is actually for bullish momentum a inducement topics, and when you see this is completely a reverse, so that's called a bearish inducement topics, a bearish moment of structure. Like this is here, you can see this is actually a bullish structure, which is I draw here a bullish structure. And if the market is doing this is a bearish structure, and this will be called, this is bearish structure. So this is the highest point is getting entry, and this is the point where it's called the bearish inducement. So if you want to understand perfectly, then I can draw another thing again. So let me draw it, a bearish inducement. So this is how mostly we can see. Okay, so this is the bearish structure break. The bearish structure is the break, and this is where somewhere we can find any kinds of demand, any kinds of supply zone, because this is bearish, so it must be supply, and this will be the inducement. So this is IDM. Okay, maybe I make it wrong, so let me make it reverse. So this is the inducement, and this is, so here is the inducement, liquidity is here. So there is inducement liquidity, and when this is actually this move, when the move is created after this inducement, and then it is breaking down up, so this means the inducement liquidity is swept up. So this liquidity has been swept. So when this liquidity is swept, then we will definitely say this is the inducement is cleared. So the liquidity is cleared. So this is how the bearish inducement and bullish inducement is work, and there this is example of drawing. So now we'll show a example that how it's actually the inducement topic is work. So I'm gonna give one example. So for example, we see that the market is going upside, and we can find a breakout structure here. So this can actually not breakout structure because this is not close above this high. So this is why this is not our breakout structure. So when this created the highest point, and this is here when this candle is close above the high, so this is where we got the breakout structure in our markets. So now let's see, and there we can find any kinds of imbalance zone. First of all, we try to identify always. So this is the imbalance zone. So this is where the imbalance zone we find out. So where we're going to this imbalance demand is the last candle. So I have drawn my demand zone here already, and then we are gonna waiting for the any kinds of, if it create this the liquidity zone of inducement, we'll find. If it not create, then also we'll look for something, because we're gonna always working on our analysis and our strategy that inducement should be working every time. So now let's see, the market is, you can see the market is did a pullback. You can see here the market is did a pullback from this high. It's made a pullback and then pull back and then go to the pull up, and then it should be come down here. So let's see what it's do. And you can see it's aroundly, it's not actually the break the high. If you're gonna see that is it really breaking high, then you can see it is not, because the candle is not close. So this means this is not any kinds of breakout structure here. So this is actually creating an internal inducement liquidity zone here. So this is where the market is created a liquidity zone, which is our inducement first of all, and this area, and it has been created some of the liquidity zone. So if we make it as a liquidity zone, this here, so this is our inducement. Let me make it reverse. So this is our inducement zone, and this is the liquidity zone, because inducement means is basically a liquidity, and this is internally a small structure liquidity. So this is created. Now we should wait for the market should sweep this liquidity first. Now let's see, and let's forward. You can see the market is swept the liquidity of inducement. This liquidity is swept down, so the inducement is clear. So now there is no any kinds of valid inducement or liquidity zone validated here. Everything has been mitigated and it has been cleared. So this is why now we're gonna expecting it should come to our demand zone. So first, if we see, this is our imbalance or a busy or imbalance, it is already mitigated. So now we're not gonna interested to our busy interested zone, and we're actually interested in our demand zone. So this is our demand zone. So we'll place our entry in demand, and we'll place the stop loss, actually the low, if we make it this area, but it's gonna be a very tight stop loss, but I always keep to mention there in the last low. So this is actually the last lowest point. If you find out there, this is high and this is low, and then this is the push. So this is the lowest point. So our stop loss definitely below this low. So our stop loss definitely below this low. So this is below this low, and we're gonna targeting the recent highest structure. So this is the recent high, and we're gonna see that there is 3:3.12, which is basically 3:3.1 trade. So which is basically we're getting $300 by risking $100. So this is a very good risk reward ratio, and let's play it out. It's really work or not. Now you can see we're still not got enter. This candle is actually enter our trade, and you can see this is a very big width it has been lifted. If we really don't keep our stop loss below this low, then definitely we are gonna outing from this trade. It's gonna be hit our SL this area. So this is why the stop loss definitely should be keep always the last low. So this is why the last swing low I keep my stop loss, and you can see this came here, but the candle is closed inside of our demand zone. So this is why it's working as a very good demand zone here. So now we can play this trade, and it should be work as per the analysis, and let's see where it's gone. Now we can see this is playing one by one. You can see it was moving on reacting this area, and internally this and this area, if you want to go to make this a very more aggressive entry here, then you can shape some a smaller time frame in this area, and you can make some confirmation of your trade, and you can enter trade, and you can in that way you can make a very tiny stop loss and get a bigger target. So that's concept also I already have in my YouTube channel learning video playlist. You can go there and you can check out there the best strategy of making your trading strategy. So that video is already here, you can check out there. Also I will make that video into this I button here, so you can check it out. So now we're gonna see this is going to the hit or not. Now you can see we're still again we tap this our demand zone, but we still have to be patient, because we're not gonna close our trade or anything else with our, it should be get a stop loss or it should be get TP. Now you can see this when the tap again, and this is created a very big candle, a very big buyer activities here. So it should be go to our target. Now let's see, and you can see it has been nearly the target, but it's still not target. So now this candle, the rest of this candle is where we are actually get our target is hit. So this is how the inducement topic is work, and when you are applying the inducement concept, in that way you can get your trading accuracy, you can improve your trading strategy, and you can improve your market structure. So best way to identify the market structure. So always use the inducement topic before identify the market structure, and always use the inducement to concept, and you use your strategy to improve your trading strategy. So this is one example. I show you that the buying setup and the bearish setup is likely similar to the reverse there. So I hope you understand the bearish is completely a reverse. When the market is going to the reverse there, the same strategy you can apply and you can grab the bearish trade. So I just show you that, and one trade which is a bullish one. So I hope you understand the bearish one is you can do testing on yourself. From your side you can do the testing and back testing yourself, so you can improve your strategy and you can make your strategy more accuracy. So I hope you understand this video, and if you having any question related to this video, you can give me on the comment section below, and you can share it with your friends, and please subscribe our channel and press the bell icon so that you will never miss any video just like this. And thanks for watching this video.